The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's either you wake up and it's Christmas morning, or you wake up and you're in a haunted house and there's little things jumping out at you. These S&Ps, man, it's every day. It's 15 to 20 points gap either way, seemingly. I'm going to go right to those things here right now. And, when I'm in Asia, it's a little different scene because, you don't have to just wake up and be shocked by something like this. You kind of see it kind of happening during the day. You're kind of easing into the day. You're maybe working out, just doing your normal routine, and then, the opening happens. But here it's just like, ooh, man, you just, you're in the bed like, ugh. Anyway, maybe I'm the only person that does that when I do sleep. So here we go. S&Ps, we have a situation, and you guys don't need me to tell you this. There is so much uncertainty right now. I mean, the Greece thing was one thing, the Puerto Rico bonds and all the crap going on there, but the Chinese being world's second largest economy, blah, 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 just taking measures on their own in a peg situation and kind of doubling down today on the currency, not, doing any bond buybacks, anything like that, just flat out, making a stance like that. It's a statement in itself. It's a statement that their economy is got issues, and they're going to do what they have to do to fix it. These things that they've done recently with the stock market, and initially allowing people to mortgage their house and buy stocks and things like that, and now they're trying to take on the brunt of all that responsibility by the government, basically just stepping in on a number of different ways to deal with that, devaluing the currency. I mean, that can't be very settling for normal investors that are, looking at, in a normal situation, in a portfolio for a long-term investor, your portfolio manager should have some type of currency hedge going on. They should be in some type of notes bond situation, and that's a mixture of convertibles, of corporate bonds, treasuries, debt instruments like that, and then you've got your equities, and that balancing act usually will. And a lot of portfolio managers, again, I don't even, some of these guys that go out and raise all this money and wear the tie and the white shoes, I have no idea how they amass some of the money they have with some of the trading plans and techniques that they use that actually don't incorporate some of the things that I just said. But that's a normal, situation. It's a mathematical hedging technique that, basically is, in my opinion, the way to go. So the normal investor is going to wake up to this type of activity. His registered investment advisor, whatever, is probably going to, he's going to go, what's going on? What should I do? So the portfolio manager, the registered investment advisor, the broker is getting a lot of phone calls right now. And those phone calls are, what should I do? What should I do? And they're obviously, if it's a broker, they're obviously trying to sell them an annuity, or some kind of mousetrap right there that they can't get out of, where the broker makes, 15% of the money involved up front. But, if they're a decent guy, they're saying, you know what, we don't know how this is going to shake out. We may want to go to cash. And I think that type of attitude is being talked about really today more so than it ever has. So, could we have, fundamentally speaking, could we have some more selling that'll happen with these S&Ps? I actually fully believe so. We've been talking about this for a while. And again, I've been wrong on some of these rallies, but, the way we've been attacking this from a trading standpoint, not from a long-term investing standpoint, has been to try to find inflection points to sell. And we've been basing that on literally, remember, and I say this every day, but those indices, it's not like somebody goes in and, me and, Jimmy Bob over there go in and say, hey, we're going to buy a bunch of futures and we're going to raise the market. If you think that you can do that, you're pretty much starkly wrong. And that is because these internals, the arbitrageable situations out there, if the components on the inside don't want to cooperate, the futures won't go up. So when we look at these internals and we look at our breadth, we try to figure out, is this a real situation when we're going up or going down, or are we just in a mixed up trading range at best? And what's been going on lately has been a mixed up trading range at best. And we've been gauging that and been able to look at resistance areas to sell based on that concept. And we've, before we developed this breadth situation within the scanner, and by the way, I'm going to go back to my home screen. I got a new version out for you guys today. Got some really cool new additions to this. Some you can create your own custom lists very, very quickly and access them, and a couple of quick navigation bars and things like that, and import-export features. If you guys have this scanner, when you try to log on today, you'll see that you should be asked to push for a new version 3.0. And if you don't have the scanner, when you get a demo, you should be able to get this. Okay, I think we've got one. We're going to get to one in just a bit here after the first break. Or actually, we might be able to get them. Do we have them right now? Or are we going to wait? Okay. Well, Juan, are you there?
Yes, I'm here.
Great. Glad we are having technical euphoria today compared to yesterday.
Oh, yes.
How are you?
I'm doing fine. Just looking at hearing you and what's going on around the world this morning. It's kind of crazy, but full of opportunities. We've been just going long on treasuries for a while and shorting S&P. That's been the game.
Right. Yeah, and I hear you. You may want to talk a little bit closer to your mic. I think it may be a little faint, but that's okay. On the S&P situation, sure. I was just trying to, kind of set the stage earlier, Juan. I don't know if you were listening, that, there's some sea change events going on right now that don't really involve, 3% of the GDP of Europe of a country like Greece. I mean, this is the world's second largest economy. And, we've got some unsettling news that comes from that area, and they're kind of doing things that aren't really conventional cooperative type actions. What are your thoughts on, and we've got about 4 minutes before break here for the first break. What are your thoughts on how that ultimately is going to end up? I mean, do you have any just kind of broad scope thoughts on that one first?
Of course, I think we're in the middle of another crisis that happens like every 8 years, every 7 years. We're just in the beginning phases of that. And China has just escalated the currency wars to a new level. This is the first time they devalue the currency so big. I mean, in the past 20 years, this is the biggest devalue action from the Chinese government in 20 years. So that sets apart and tells a lot of the story, what's happening and what it's developing right now. Everywhere, every major stock exchange is suffering from this. You see Europe is going down this morning, US, Latin America is going to suffer. Anyway, I mean, and the only secure place right now is the US with the treasuries. That's it. It's going to unfold. Right. It's going to be apparently kind of nasty in some places. It's been already with oil coming down so fast. countries like net importers or exporters of oil. Basically, the exporters are suffering big time, and we're in the middle of a crisis. No doubt about it.
Yeah, I agree fully. And somebody reminded me, I just kind of take it for granted that everybody knows you. Juan is, it runs our South America operations for TAS down in South America, and he also runs a relatively large proprietary trading group down there, and is a developer on some of the things that we work with together. He's in Colombia, South America right now. But Juan, you that's just giving everybody a heads up if they haven't watched the show before on what your background is. And he's actually got a graduate degree from Berkeley in California, which I'm completely in awe of every time I think about that.
How gringo? No, just kidding. just got my education from the U.S.
Yeah. Well, it's, you speak English better than I do, so it's not, you've been saying, I don't want to divert too much away from what we need to talk about today, but, you've been seeing the, changes in the country you're in down there in South America in general, which you consider relatively scary, right?
It's pretty much because, Brazil is going down. Every major country here in Latin America needs a lot of, the story here in Colombia. Let me go slowly on this because this is important.
Take your time.
The
We're going to hit this after the break.
The story here in Colombia is pretty bad right now.
Okay.
Because the government was established its budget at $85 oil, 85,
right.
And now we're going to 40. So yes, we have a big problem right now, and the economy is shrinking. And anyway, Brazil has a huge problem with this economy and with the confidence of the consumer to the local governments and the central government and all that. And add to that problem the oil going down. So Brazil is another big mess. Mexico, everywhere you go in Latin America, you have problems right now. So we have challenging years. Probably the next 3 years going to be very challenging down here and everywhere in the world. I cannot just imagine what's happening in Russia right now.
Oh my God! Yeah,
nobody's talking about Russia right now. Why? Why is Putin so quiet right now? What is going to happen there? His relationship with China, anywhere.
We're going to go to a break here, Juan.
A perfect storm right now.
We're going to go to break here right now. But I have 2 questions for when we come back. How is this resolved down there relative to currencies, and got a couple other questions when we come back. Guys, we'll be right back in just a second.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Juan, are you still with us?
I'm here.
Great. Got a question. After you said, and we've been talking about, Colombia, just the temperament down there, in all the countries in Latin America, and you're even mentioning, God, you hope it doesn't turn into Venezuela. Just everybody gets pissed off.
No way.
There's a whole new regime change. You've been talking about that, actually.
It could happen, but John, the problem of all these countries in Latin America right now is the extreme corruption that we have. It's just going nuts. I mean, it's going to a different level. I believe we are the world champions in corruption in many countries. Brazil has this big problem. Mexico has its issues. Colombia has its issues. So the big problem right here is not the guerrillas, it's not the narco trafficking stuff that you read all the time in the news. The big problem that we have here in Colombia and throughout Latin America is corruption. Is the governments don't work, they steal like hell. So how do you solve that? Well, I saw a country who solved that 20 years ago, 15 years ago, and now is a major economy in Asia, is Singapore. Singapore fixed that thing very easily, but is a little bit, extreme because, is that penalty for corrupt officials, that penalty for narco traffickers and all that. So we are in the middle of a big moral crisis in Latin America. We are, we came from a boom of the commodities rally in the past 10 years, but now we spend all that money from that boom in politics, in politicians, in corruption. So that's, for me, my take and what I've seen around the globe, in the Colombia and throughout Latin America. That's the biggest problem we have right now, corruption.
You know what was weird, and on that same note of corruption, 2 things. One of them, when I traveled the globe earlier in my life, I was when you're younger, you're thinking, there's too many police situations in the U.S. and God, it's nice to be in another country where the cops aren't harassing you, blah, blah, blah. That's just, a little bit of an attitude I had when I was much younger. But the more you kind of surf around, and going back to your issue about corruption, you really, when you go to another country and the police are on the take or something's not right, the whole system can't work properly. And that's why, when you get back here, you're thinking, okay, well, it's good to have some form of control to some level, and have checks and balances in place so people don't, so the politicians don't rape the government, which, in effect rapes the people. So, that's one thing. And I totally appreciate what you're saying, that has to be one of the forefront things to get cleaned up. The other thing last time I was in Colombia, I was just noticing real estate was so detached, the prices from what, I don't know. Can you speak on that for a second?
We have a boom on real estate. Is getting tired, I guess. Is a little bit above, you have the same prices of commercial real estate and residential real estate in Bogota that you have in certain areas in Manhattan. Right.
I know.
Now. So it's too expensive. It's too expensive.
I was like,
I think we have a bubble.
Why would anybody afford this?
Yeah, it's crazy. And I think it's not going down. It's not going to implode. Probably it's going to stabilize in these levels because there's a lot of demand. Colombia has a very interesting potential for retired communities. So there's a lot of people because of the climate. As you know,
right.
We have perfect weather here. So there's a lot of people coming down here and buying properties just to retire. So we still have a market, a buyer's market right now.
Right. Well, I was noticing that the regular person with the wage scenario down there, it had to be, upsetting, to say the least, that I know what people are getting paid down there, and I know what the real estate is. It just seemed like a massive disconnect.
Absolutely.
And that's an unsettling
the millennials, they don't want to buy a property. They don't want to be tied to a 30-year loan with the bank. They just want to rent, and that's it. Because they're going to move to another city, another country, and they don't want to have anything. They don't want to buy property. That's one of the major problems in the coming years for millennials. They don't want to buy property. You know that?
Right. I tell you what, Juan, we're going to head to break in just a second again. But when we come back, I promise everyone that we will get into some charts. We'll talk a little bit more about
the politics.
Some of the get out of politics for a second, and get into talking about gold and some plays. We're going to look at Apple too. So if you guys hang around, and Juan, if you'll hang around, we will try to cover some ground really quickly, and also show some new features in the scanner that we just rolled out, Juan, that we need to talk about.
Oh yes.
All right, guys, we'll be back.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Juan, you still there?
I'm here. Yes, sir.
Great. Let's cover some things that hopefully might be able to prepare some folks for before the opening here, and then we're going to get into as much as we can after that. The usual suspects we usually go through, as you know, S&Ps 2060 still a big area, trading 2065 right now. Juan, I've got my daily unfurloughs at 2085.5. That's where we closed below yesterday. We went back and retested this morning, and we retested it to the tick. 2085, 25, 2085.50 is the level. Then we sold off of there. That's why this has been a little nerve-wracking. One, for me, it's obviously had some volatility around that area, but that's kind of the Maginot line. What are your thoughts, considering that 2060 area is the weekly unfurloughs, 2085.50 is the daily unfurloughs? What's your stance on the S&Ps right now?
Well, to be honest, I'll be shorting the rallies on the S&Ps, but I'll change my bias to the buy side if we start trading above POCs on the 240s and the 480, even the 8-hour chart. I've been looking at that thing and I like it. So it's just a matter of playing the game right now. There's a lot of people buying here, but my feeling is that, as I told you at the beginning of the program, that everything's kind of coming down, and I'll be shorting the rallies. Maybe you do some longs today, because I see the potential to go long intraday. But in the long run, I think we still have some downside potential.
Yeah, I think the key you said there for everybody is one is long-term looking for areas of resistance to sell. There's obviously going to be some day trading opportunities on the long side. In fact, we are looking at some massive intraday volatility right now. Here's the 240s Juan was speaking of on my screen right now. We don't have any new profiles appearing down here. There's really not a lot of reasons to start picking too many battles down here. We passed on the 2060 area before on the long side. We were talking about that as a target for shorts. Now we've kind of come back and rattled up into that 2085.50. We're kind of in no man's land a little bit right here. Would love to see a weekly close below 2060 by Friday for long-term guys. That would really be some technical damage in my opinion. But right now, yeah, just again, we've gotten stopped out of selling some rallies lately, Juan. I mean, you know, some of these levels, obviously we've shot through them. 2102, 2104 has really proven to be something we could hang our hat on quite a few times this past couple of weeks, though, and that's based on a big, wide profile POC on the daily and that weekly unfair high that I'm showing right now. One can you know, a lot of folks in the den, they follow the TLT, they follow the 10-year and the 30-year. You know, you and I have just every day we talk, we're like, you know what, all this talk about raising rates and the economy's doing well, blah blah blah. It's like, show me the money. That's what we've been talking about. It's like, where is this bond sell-off or note sell-off? And therefore, going opposite has been the play. So, what do you think these things are headed, man? We've been pretty much spot on this one.
Oh yes, yeah. It's probably the U.S. is the only place where you can put your money safely right now in the world. So treasuries they're the thing to trade right now. But I'll be careful. I mean, I'll be playing my levels with my trading plan with very, very precise levels and all that. And because everything can change in a second. Right now, everything is very, very in a dramatic kind of. It's when you a director change the tone of the music to kind of suspense. So that's where I feel we're right now. It's a lot of suspense, but the play is treasuries short. S&Ps has been for a while. Not sure it's going to happen. It's going to change. There's some interesting things happening in currencies. The Swiss franc, for instance, is doing something interesting right now today. Anyway, gold is going up today.
Before we get to gold, let me give some levels on the 10-year here, just before we get out of this. 27.11, 27.14, and 27.12, 13. That 11, 13, 14 area is big time support now on the 10-year, and short-term support's 128.02, 128.03. We've already hit that this morning. We've done our rallies and we've backed off, and these are the 240 unfair highs, but that 240 unfair low coincides with that weekly unfair low and the daily inflection point that we've been paying attention to at 127.11. So again, big support at 127.11, 12, 13. Short-term support at 128.02, 03. Juan, let's get into gold, because obviously that's been something you and I have been speaking about religiously on a daily basis. I've got the December contract up right now. What's your thoughts on this one?
This is okay. Hold on, because I have a delay. Gold.
I'm trying to get my chart up here.
Okay, perfect. No problem. I mean, gold has been, pounded to the downside. I mean, there's somebody saying that gold is going to 990, 850, something like that. But in the daily, we've seen some oversold condition, and this is kind of a mini rally.
Yeah.
I don't think this is the end of the whole game. I think we are just now we're trading above boxes, which is probably a vertical move is coming. There's a green bar there, so we might get a rally. But this, again, because of the weekly and the monthly chart is on the downside, I'll be shorting rallies on the daily. But probably take advantage of some mini rally in the 240, the 60-minute chart, something like that, intraday.
Yeah, what we've been talking on, we're still on the same page all the time. It's amazing. What we've been talking, what we've been talking about, literally every day is since we started breaking down below the 1170, 1180 area, is it's okay to be short, not okay to be long, but we've been hoping that we get a rally up into this 11 or 111. Excuse me, how do you say that? $1,112 an ounce. Maybe I should say it like that. And we actually had that happen yesterday, and we kind of got back and closed below. I'm not completely impressed here with even what's going on today with the rally. I'm still kind of giving that a little bit of noise factor for myself. I got a little bit more of a relaxed stop on this than normal because I'm just not convinced that, people are looking to gold for a safety situation, especially, this is almost as if it's showing its hand. 1081 really proved to be that inflection point to pay attention to on the downside. But, again, for all things considered, we could get back in the balance area and just rattle around here and sell off more long term like you're talking about. So I think we're on the same page on that one. Let's take a look at something that I've, kind of been, well, the yen, we've been pretty right about that lately. For the last 2,500 pips, actually. But let's take a look at the euro. This has been something that's been a little nerve-wracking to me on the weekly. We've been trying to, stay short-minded on this thing and get below 109.50 and just kind of use that as the latest opportunity. Juan, what are your thoughts on this one? I've got the long-term weekly chart up on the euro.
Look at that. That's kind of a launching pad. It's just about to either go, it's a P form, is going sideways, but if it trades above the POC, it's going to go to the unfair high of the box, and then if it breaks the top of the box in this chart, man, look to your left. You have nothing until the next profile, the previous profile, that one in 6, 8 months, 12 months ago.
Yeah, that's why we're orienting the stops, guys.
We are in the gray area. But right now, if euro crosses above the POC, is definitely a potential long. I don't see. I guess the short is a little bit done in this area.
Right.
We'll see.
Yeah, it's definitely kind of in a kind of a shake around little balanced area right now. 109.50 below there, was trying to just continue to look at this as a long-term consolidation move to possibly move even lower. I haven't seen any divergences on this thing on the daily or anything else, so I've been trying to stay that way. But I hear you, guys. Juan has kind of set the mark. We get above the top of the POC on our weekly, which is around 112.0708. We may see some higher numbers into 114.67. We always talk about every day, Juan, like stops are so important, and it's so important to kind of regather yourself and wait for the market to come to you. Now, what this program does and what this scanner does, and I'm going to go right into the scanner really quick. You don't really need these charts. You've got your own charts usually. We're actually having our own chart package come out in a week or so now, finally. But when I go into our Forex section on the scanner, and we got a really cool new release today. If you guys are joining us late, you should get a demo of this. Do yourself a favor. Here's those inflection points, 112.08 that Juan was speaking of. And I'm going to actually, just mouse over these and see these. Got the green shoots here without question on the scanner. We're getting above profiles on quite a few levels here. And my stops were recently oriented around 109.50. I'm trying to look at this from long term, but here's all our inflection points to pay attention to. And there's that POC Juan was just speaking of. Remember, when we have a relatively wide profile, you've got to pay attention more so to that POC, that blue line. So that's the next battle point area. We're kind of a little bit in flux here right now. So the scanner gives you all that. By the way, Juan, I don't know if you watch my screen right now, but this Demantis just put this out literally an hour ago for everybody, a newest version, and it's got some really cool quick navigation features. You can add navigation to your dashboard. You can import and export lists. You can access new lists very, very quickly now within the it's just play around with it. I'm going to make some new videos for this, but I think you'll get a kick out of this new version. I've got somebody. Juan, can we look at November beans really quick? Or actually, excuse me, September wheat. Is that what we're looking at?
Sure.
Somebody was asking me about that in the den here. My daily chart is just having issues. Sorry about that. Here's our weekly on September wheat, and I don't know the symbol for Kansas City, so I'm going to look at this. 493, we've been talking about that as a big level. We've got a massive report coming out today. That's still the situation. Do I like this as long? I mean, I'm not a big fan of rolling the dice before reports. So the levels to pay attention to are 493, 497, that 524.5. We looked at that as a little bit of a target up top when John from Philadelphia was calling a good shot on the long side the other day. I'm not a big fan of going long any grains right now. I'm going to take a look at November beans really quick here. The deal is on these, 955 general area is going to be a big level to stay above. If not, I think we could cave in and roll down to 910. But again, watch out playing the game before these reports. Juan, what else? I mean, can we look at Apple? Is that possible?
Yes, absolutely.
All right, let's take a look at that one together. Or anything else that you want to throw? Oh God, we want to look at those other indices. We'll look at that after this break. So Apple, Juan, here's the long term on Apple. Like, where's the targets on the downside, and does this thing have a chance to rally? Because we've been looking at the broad tone of the marketplace and saying stay away from longs altogether. This one actually started showing its hand a little early here a couple of weeks ago. What's your thoughts on Apple?
I'll be shorting rallies. No question about it.
Lovely.
It's trading below boxes.
Lovely.
I'll be shorting rallies.
Lovely. You know what the weird thing is, my friend? I did that Bloomberg article yesterday that we were talking about. We actually,
Right.
colluded on that. And there's two things I want to say. One of them is it's amazing now you do a research report or do a brief on something, and it's like old news within 24, 48 hours. So when they publish this Thursday, it's like,
It'll
okay,
be so out of date.
Yeah. The cool thing about the scanner, by the way, is it gives you a real-time research report. I mean, with these, and I'm going to show you this really, really quick. I'm going to go into my S&P and I'm going to pull up Apple. If you go to this TAS Says button, it tells you immediately, based on the current conditions, the long-term, the intermediate term, and the short-term view. And these research reports now, these institutional guys are just putting them on the corner of their desk and using them as firewood. This is, weekly and monthly views on things now are literally toast pretty quickly.
Wow.
So I'm
That's
with you on
pretty
Apple,
cool.
though. What else can we get into here that's on your radar screen for your prop guys right now?
Well, just to continue with the analysis that we started with Latin America, if we can look at
Sure.
Brazil, Mexico, and Colombia, those three things.
Okay.
Brazil is
Perfect.
EWZ, Echo, Whiskey, Zulu.
Let's look
That's
at
Brazil.
I've got the Bovespa index up. Is that cool?
Yeah, sure.
Okay, these are the futures. Let me see if I can. Let me see here. Daggone it. I tell you what, during the break one, I will solve the issue of the symbol itself, and we'll hit those really quick if you can hang around.
Okay.
Great.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Juan Villegas with us today out of South America and partner of ours down there. Juan, I've got the Bovespa up on the long term on the weekly. I mean, this thing got relative strength situation to the U.S. indices has been horrid. Where's this thing headed? I'm going to pull up the daily here. Good Lord. Ouch. Are you still with us? I guess Juan is not with us anymore. Okay, we'll continue. I was going to cover some South American indices there, but we're going to hit, let's see. I can't hear him if he is with us. Sorry, Al. I'm going to move on. Okay, we took a look at the U.S. dollar as something to buy the dip. Guess what? We have hit 96 and some change here. 96.11 was that big support area that we talked about. We've hit, guess what, this morning? 96.17. That's close enough for me. We've bounced quite a bit off of there. This is one where, again, we've talked about letting the market come to you. We've talked about not shorting the U.S. dollar, waiting for breakouts above 98.31, or waiting for the market to come to us. We always talk about there's two areas that we focus on primarily in any type of trading situation. This is a really, really good example. Just as, we talked about the euro, we talked about that Maginot line, we got to take our medicine sometimes. And taking medicine is a part of this game, guys. Do not forget it. Do not let things run away from you and add to them if you're wrong. Just take the hit and move on. All right, it's hard to do. It's easy to say. Just do it. 98.310 up tops, target down below 96.11 on the U.S. dollar. We've kind of met that already this morning, and I'm looking at stops below there now and getting long the U.S. dollar again. Got a free ride down here, and in my opinion, just a wonderful pullback to take advantage of after we were light on this product. Juan, are you back?
Yes, I'm here.
Great. We're talking about the U.S. dollar and buying dips. Let's take a look at something else that everybody's paying attention to here. Obviously, crude oil. Not a lot of new information here. In fact, I'm looking at the daily one. There's no new profiles appearing down here. The magenta bars have now stopped on Navigator. Where's this thing headed, man?
Well, from a fundamental perspective, you see that Iran is coming and pumping more oil. OPEC is not stopping. The world is not buying more oil, so there's a lot of supply and demand coming down. So I see that thing, 40, next stop. Of course, we're going to have a bounce from here. It's a little bit oversold, and you have the magentas on the Navigator. So we might get some bounce here. Today, we have inventory, so there might be a setup for a nice intraday play on the long side at 10:30 after the report, and then wait for new profiles. And once you have the new profiles, just evaluate where you're trading at and probably short rallies again and again. I don't see that. I don't think we have seen the capitulation of sellers around here. I just don't see it.
Yeah, we got about 10 seconds before we got in the show here, Juan. I want to thank you, and just great insight. It's lovely to have you on anytime, and let's have a good day trading.
Okay, thank you, John, for having me. Thank you, guys. I hope I'll be here more often.
You will. We will. All right, guys, have a good day trading. Send me an email or two if you got some questions. We'll try to get them answered. Stay tuned for Larry. He'll be on in just a minute.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.